those of you who would like a refresher for the Chapter 7, I'm going to go over pieces of highlights as it relates to Chapter 7, and then from there we'll continue with problems. I think we might have gone over some problems. Did we?
It's hard to say.
Well, we're just going to redo it. Maybe I was dreaming that. Don't mind if I turn off some of the lights? Makes it easier to fall asleep, doesn't it? Okay. So we started talking about fraud. Oh, I know how I got so easily distracted. What did we watch in here that brought us all back to memories of fraud and lack of internal controls? Enron. What did you learn from that movie? What not to do.
Or what to do, depending on how you look at it.
Or what to do. What do you mean by what to do depending on how you look at it?
I mean, if you can do that early enough and get out within like a reasonable amount of time, you have billions of dollars. Also, they're very good at motivating people.
They were very good at motivating people? Okay, so some of you think this was maybe smart if you got in early and got out early, and they were good at motivating people. What is the politically correct answer that we're going to have regarding Enron? Anyone? Not to do it because it's bad. So that's the politically correct. Anyone else have thoughts on that? Ultimately, businesses make money because they earn a profit for their shareholders, one. Number two, there is something to be said for being a citizen in the community and doing the right thing. And ultimately, that will end up making money. These people made money, but what happened ultimately? They lost everything. You're right. That one guy, Lee, one of the largest private owners in the state of Colorado, got out early. But realistically, nobody wins. Very few win, and then after they win, they end up going down too. Ken Lay, Jeff Skilling, they all ended up going to jail. They all had retribution or restitution, had to give it all back. It's not the way you conduct business. And they might have been good at motivating, but really there was a climate of dog eat dog. Every year they would lay off 10% of the workforce to kind of instill an environment. If you're not going to make the cut, you're out of here, which can create and lead to bad behavior, can it? Because there's such a fear in losing your job. So when we're talking about fraud, internal controls, and cash, part of what we're talking about in financial accounting is to be aware of the importance of internal controls and how fraud can occur in companies. So basically, we talked about the fraud triangle. You're probably going to see this one again. You must have all three factors in order for fraud to exist or to occur. You need to have an opportunity. There's an opportunity where it provides you with a means in order to steal. There's got to be a sense of financial pressure, perceived or realistic, financial pressure lacking money. And then there has to be rationalization within a person to justify the behavior. Rationalization such as, well, you know, Joe's getting $1 more than me, and you know, gosh, we've been working for 3 years now. If I do that, that's only about $6,000, and by, you know, if I would have made the same amount of him anyway, it wouldn't be a difference. There's a way you rationalize. You know, I give to this company so much, or they're not going to miss it. There's got to be a form of rationalization in order to ultimately take the action of fraud. Sarbanes-Oxley came in back in 2002 and really changed or attempted to create legislation in order to change the community and force some restrictions and penalties for people who commit fraud, specifically as it relates to the management of the company. They require that companies have a system of internal controls, and that public companies need to auditors need to report on the internal controls of public companies and if they're working. People that run the companies ultimately become accountable to any fraud that occurs. And SOX created this new PCAOB, this outside board that monitors these actions. So Sarbanes-Oxley was pretty a big piece of legislation that came in hoping that things would change. Have they? Maybe it's curtailed some, but fraud is still alive and well, isn't it? Internal controls are important in a company because they are trying to protect your assets, be it the inventory, the cash, even internal controls to protect that when employees are there, they're working. They're not wasting time while they're on the clock. Their internal controls are set up to try to make sure that the accounting records are really what they say they are, that the transactions are recorded appropriately and on time. They're supposed to increase efficiency in the company and make sure laws are being followed. So internal controls are guidelines in place, procedures in place that protect assets. There are various components as to internal controls, and we'll kind of take each one here. Ultimately, internal controls are put into place so people know who's responsible for what actions and what items within a company. So, for example, when there is only one person that's responsible for handling the cash, that actually deposits the cash, if something goes wrong, it's clear who ultimately the blame's going to fall back on. So controls as it relates to responsibility give a single person authority over specific items. It can also be inventory. What if there's only one person that's allowed in the back warehouse? Well, what if something's missing? Who's it going to fall on? That individual. What happens if people can walk freely in and out of a warehouse? Who's going to be responsible when 100 of the tennis shoes are missing? You don't know. So when people receive a certain amount of responsibility, it helps to initiate controls because the buck stops with you. And you know that you're responsible for a certain amount of assets. There's all kinds of ways of establishing responsibility. One piece that's really important in internal controls is to segregate duties. So the person that's responsible for paying the bills isn't necessarily going to be the person who authorizes payment of the bills. Okay? The person that's responsible for opening the mail probably shouldn't be the person that goes and deposits the checks into the bank. Why? Because when two people can do a transaction that can compromise another piece, such as cashing the checks, if you're opening the mail and you can go and hide some checks for your own personal use or cash, do you see how that compromises the ability to have an opportunity to steal? And however they might rationalize it, but it creates opportunities. So what we're trying to do with internal controls is to eliminate opportunities by having guidelines in place that allow one person a certain duty that won't compromise another aspect of the company in protecting the assets. So then we talked about ways that certain paperwork can be created such that we make sure things aren't missing. When there are pre-numbered documents, think of a check. You know how they start with 01, 02, 03, and they keep going up? And let's say you try to write a check and you screwed it up. You still know that check number was a void. What does that do as far as keeping track of your checking account? It makes sure that you have every single check that's being recorded. Nothing can be out there that might be misplaced or not being recorded. So there are ways within a company that you can create paperwork so you know everything's complete. When shipping documents come into the warehouse, if there are shipping documents or receiving documents that are pre-numbered, you know that you've taken into account and recorded all documents that have been brought in and counted for in the inventory. So these various types of internal documents really help to substantiate before a bill gets paid that we actually received the goods, okay? Or that someone legitimately authorized the goods. What was my story I told you about at the Mayo Clinic? Did you guys hear that story? Did I tell you that story? How at the Mayo Clinic there was an internal auditor that purposely tried to find some things to see how the internal controls were operating within the Mayo. And what he found out, he created, opened up a P.O. box, and he researched some companies. Some were true, some were fake. Had them all the checks sent to this particular P.O. box, and out of 15 particular invoices or bills he sent, 14 got paid. He applied some pressure to them, such as, I'm sending you to collections. They were all false. They were all fake. But somehow through different departments within the Mayo, they all paid the bills, which shows who authorized these bills to begin with, who approved the bills, who requested payment. They didn't even check that the work had been done or not. Isn't that scary? That's a company that obviously in that scenario was really lacking in internal controls, because someone should have authorized that service or whatever cost was. Someone should have had internal documents to substantiate it. Then when the bill came, who approved it? Approved work that never had been done. Make sense? So when we're dealing with various types of internal controls, some controls can be actually physical controls. Those of you that have worked at a clothing store know that sensors are now put on items, not just a clothing store, but anywhere. Sensors are put on items so they can't leave the store. Very expensive items get locked, right? We use safe deposit boxes for items that have value. Many stores now have alarms or systems in place so no one can break into them. Time clocks. You can no longer just record your time in. They don't trust you. Well, it's easy. It's an outside control in place to make sure when you punch in, it's recorded with the outside of you, and when you punch out. People can still punch you in and punch you out, but now they're even getting to fingerprints, aren't they? So it's got to be the actual employee. Key passes, locked warehouses, all of these are ways of protecting their assets, that you don't maybe record more hours than you're really working, that people can't take off with money, that things of value are secured in safe deposit boxes. These are things you would do on your own, with your own items too. Important documents we keep in a safe. If I've got a nice piece of jewelry, do I just leave it out for the world to come in and grab? I'm going to probably put it in a secure place. So there's, some of us might go to having alarm systems. Others of us might just make sure we lock our doors every time we leave, right?
Buy a shotgun.
Buy a shotgun. That can ultimately deter, as long as you're not Pistorius.
I think the problem is you have to be there with your shotgun.
That's true. How many of you guys have kept up on this South African murder case? That Blade Runner guy, Pistorius? Is that his name?
He was just a regular. He was a 400 meter runner, wasn't he? The guy who killed his girlfriend?
Yes.
Yeah, he was just a regular runner.
It's quite interesting how, he had guns. Anyway, it'll be interesting to see how that one unfolds. But guns, yeah, he had guns to protect himself, but unfortunately he killed the wrong person. It wasn't a break-in person, as someone who was breaking in with a lock in the bathroom with the door locked. Moving on, since we are recording, how do we know internal controls are working? It's important for someone outside of the internal controls mechanism to verify that they're in place. And so to make sure that records or bills are getting approved in the right source, that all the paperwork has been accumulated before a bill is paid. So verification from an outside source to make sure that they're operating really is important for companies, which a lot of times happens with the internal audit staff within a company. Other things you can do: bond people who handle cash, rotate duties, and conduct background checks. Why are background checks important? You never know what you're going to find, and you want to avoid problems to begin with. It doesn't mean people can't change, but I just don't want them changing on my clock, right? Don't you agree? I mean, I'm all for believing that people can change and heal and make different choices, but I don't want them working for my CPA firm, you know, and be able to take people's identity. I don't think so. You go and restore yourself and prove it to someone else, not me. So sometimes these background checks are great in order to avoid potential wrongdoing. Why would it be important to rotate employees' duties and require vacations?
Maybe if something's going consistently and then it stops, they know that person is on vacation.
Exactly. So if there is something that's being concealed, allowing people or requiring people to take time off sometimes exposes wrongdoing, which is a great idea. Anatomy of a fraud. Let's see here. Maureen Frugali was a training supervisor for claims processing at Colossal Healthcare. As a standard part of the claims processing training program, Maureen created fictitious claims for use by trainees. These fictitious claims were then sent to the accounts payable department. After the training claims had been processed, she was to notify accounts payable of all fictitious claims so that they would not be paid. However, she didn't inform accounts payable about every fictitious claim. She created some fictitious claims for entities she controlled, which means she got the money. And she let accounts payable pay her. What happened? $11 million. So basically, the lack of responsibility, the healthcare company didn't adequately restrict the responsibility for authorizing and approving claim transactions. The training supervisor should not have been authorized to create claims in the company's live system. Boy, that's a fraud that was alive and well, wasn't it? Another one, Lawrence Fairbanks, the Assistant Vice Chancellor of Communications at Aesop University, was allowed to make purchases of under $2,500 for his department without external approval. Unfortunately, he sometimes bought items for himself, such as expensive antiques or other collectibles. How did he do it? He replaced the vendor invoices he received with fake vendor invoices that he created. The fake invoices had descriptions that were more consistent with the communications department purchases. He submitted these fake invoices to the accounting department as the basis for their journal entries and to the accounts payable department as the basis for payment. How could he get by with that? Not enough hands in there to approve it, right? Segregation of duties. The university had not properly segmented related purchasing activities. Lawrence was ordering them, receiving the items, and receiving the invoices. By receiving the invoice, he had control over the documents that were used to account for the purchase, and thus was able to substitute a fake invoice. Isn't it amazing the different scams that are out there? So basically, be aware there's fraud that's alive and well here. And you can look in the PowerPoints and go through the various types of interesting tactics people have used in order to steal. Limitations of internal controls. This is important. Internal controls are great to have, but you can't establish internal controls where the costs exceed the benefits. It's not possible. So when you've got small companies and the gross revenues are 500,000, it's not reasonable to have 10 employees in place so there's separation of duties. They don't have the money to have 10 employees. Therefore, you can't expect to have internal controls where the cost is so great you're not going to run a business. Make sense? Cost should not exceed benefits. There's always going to be a human element. So like in my small little business, how do I avoid that? My husband does all the money. Okay? Chances are he's not going to cheat me because he's my husband. It's his anyway. You know, when my kids used to do it, I figured if they needed it bad enough and stole from their mom, let them. I'd be giving it to them anyway. Get what I'm saying, though? So you create scenarios because I'm not big enough to have all these segregation of duties. And so you find someone, like in my case, my husband, if there's mistakes made, mistakes are made. But we're not big enough to have a bunch of separation of duties there. You need to control cash, establishments of responsibility as it relates to cash. Only certain people should handle cash. And then there should be documents that are set in place related to mail receipts or cash register tapes. Items in place or documentation that's going to be in place to help substantiate certain processes, such as collecting cash in the mail and then how that should be accounted for. Different individuals should receive the cash, another individual should record the cash receipts, and someone totally else should either hold the cash or deposit it. It makes sense. That way, it's not like the guy who authorized the purchases, received the purchases, created the invoices. That's how collusion occurs because he does a variety of jobs there and can get by with falsifying them. Another thing with cash receipts, you have physical controls. You have an auditor or a supervisor who verifies that the controls are working. And some people maybe need to be bonded because they're handling a lot of money. This is an example of internal controls. Here's a person who handles the cash register. They enter the sale. They count the cash. Then this clerk sends the cash and count to the cashier. So she checks her money drawer, she totals it, she sends it over to the cashier. The cashier then counts the cash, prepares the deposit slip. They send the cash and the deposit slip to the bank, and that goes over here. In the same respect, another copy of the deposit slip gets sent over to accounting. In the same respect, here the clerk is doing the one that's entering and dealing with the cash. The supervisor removes the cash register tape. So do you see the clerk isn't responsible or has control over the cash register tape? They're recording the money and taking it this way. Here the supervisor unlocks the cash register tape, sends it to the accounting department, and then the accounting department makes sure that the deposit slip is going to agree with the cash registers. Okay? See how that is a separation of duties? Mail receipts should be opened by 2 people. Each mail clerk signs the list to establish responsibility for the data. The original copy, along with the checks, gets sent to the cashier's department, and then the copy is also sent to the accounting department. permitting only designated personnel to handle cash receipts is an application of the principle of A, segregation of duties, B, establishment of responsibility, C, independent check, or D, other controls. What do you think? They're establishing responsibility. If one person can only handle the cash, that individual is responsible for only the cash. No one else is. The same is true when we're dealing with cash disbursement controls. When companies pay by check or electronic funds, there's more of a record than if people just, companies pay by cash. How does this work? Establishment of responsibility. Only a designated personnel are authorized to sign checks and approve vendors. So this can work by using pre-numbered checks, and they're in a sequence, and each check must have an approved invoice, require employees to use corporate credit cards for reimbursement. So by having pre-numbered items with the necessary paperwork behind it that's been approved accordingly helps make sure that only invoices that have been approved are getting paid. Okay? So again, having someone outside of the system verify that the internal controls are working is a good idea. The use of pre-numbered checks in dispersing cash is an application of the principle of A, establishment of responsibility, B, segregation of duties, C, physical, mechanical, and electronic controls, or D, documentation procedures. Okay, voucher systems. A voucher's an authorization form prepared for each expenditure. And basically, in having a voucher system, it's just showing that a particular expense or cost was being authorized by the appropriate person. Let's see here. The use of a bank contributes to good internal controls because it minimizes how much money is on hand in an office, and there's a double record of bank transactions. And ultimately here, which we're going to do today, there's a bank reconciliation. So the records we have inside a company need to balance with the records of the bank. How many of you guys have reconciled a bank statement, a bank account, a checking account? How do you guys know your account's right? We're going to learn something today. Think when you've got a lot of transactions that are going on, you need to make sure that everything's been posted. And truly, with my bank account, there have been times that they have charged our account twice on something. Or Minnesota Department of Revenue said we didn't pay employee taxes when in fact we did, you know, and they've taken it twice from us. So it's really important to reconcile bank accounts because errors do happen, guys. They do happen. Or a check got, we deposited a series of checks and they gave us the wrong amount. They can make errors too. Yes?
One time I deposited my check and it was weird because he put in my name and everything, but it went into someone else's account.
That can happen also. It's amazing. And then we have to take into account fraud. How many of you guys have had your identity stolen? One of you? You know, it's a nightmare, isn't it? When someone gets a hold of something. My husband called me. Did I tell y'all this story? Maybe it's in the past 2 weeks. So my husband calls. Nancy, I think our American Express, someone is making false charges. What's the first thing I think of? God, they need to have my cell phone number, not his. So he proceeding to ask him why. How many of you heard of this thing called Rodan and Fields? It's like the old, Mary Kay, but it's newer and improved, whatever. So he's like, there was a charge for this Rodan and Fields for $342, and 7 minutes later, there was another charge for $352. I'm like, Jim, it's face stuff, and I ordered one for me and one for my sister. So I proceeded to let him know our set of internal controls now will be they contact me, not his cell phone. Get it? I mean, but you know, thank God American Express then calls him and says, I think you've got fraudulent activity. It's very frustrating. I hate that. I feel like I'm being spied on or something by my husband. Anyway, moving on, I decided I need my own credit card, so that wouldn't happen. So when we're dealing with bank statements, there are going to be certain types of debits that occur in a bank statement that we might not have a check for. Bank service charges are potentially interest that they charge from the account, or fees as a result of our transactions, NSS, could be added that we might not have record of on our side. And then credit memorandums, interest that we earn, that we also need to report. So the bank may have items here that we might not necessarily have on our end. The control features of a bank account do not include A, having bank auditors verify the correctness of the bank balance per books, B, minimizing the amount of cash, C, providing a double record, or D, safeguarding cash by using a bank as a depository. Having bank auditors verify the correctness of the bank balance. We don't have a bank auditor come and check the bank balance, do we? So what we're going to do today is reconcile some banks registers, and we need to reconcile the balance per the books to the balance for the bank, and we need to take into account some things that maybe the bank doesn't have that show up on our books, such as deposits that haven't been recorded yet in the bank, or outstanding checks. And then there could be errors. Or the bank might have things we don't have yet recorded, certain bank credits and debits. So what we're going to do is go through how do we reconcile the bank statement versus our books. So on our bank statement, there are going to be adjustments to the bank balance, such as items we're going to have on our books that the bank doesn't have, deposits in transit, outstanding checks, and maybe errors the bank made. And then the way we're going to balance our books is we need to look at things that the bank has done we might not be aware of. Bounced checks, other service charges we might be charged, or potentially any notes that got collected. And then our balances should equal one another. This is the challenge that we're going to go through. I think what let's do is take a break from this and start working on some problems, okay? How's everyone doing? Are we doing okay? Okay, so we have, if I go back here, the template for Chapter 7. Does anyone remember what we've done? We did 7.2 and 7.5?
Yep.
Okay.
We're on 7.
Okay. View, edit document. Okay. So we're on 7.7. So let me pull up real quick the Here we are. And what page are we at, guys? What page is that on?
Not sure.
376? 77, thank you. So 77, at April 30th, the bank reconciliation of Longacre Company shows 3 outstanding checks. Number 254 for $650, number 255 for $700, and number 257 for $410. The May bank statement and the May cash payment journals are given here. What our job is, using step 2 in the reconciliation procedure, shown on page 355, list the outstanding checks at May 31st. So if we go to page 355, it shows us what we're supposed to do is this step 2, we're supposed to list those outstanding checks. So as we go back here, what we'll do, $377 here, the outstanding checks are as follows. So what's the first thing we're going to do here, guys? Check number 254. On April 30th, it shows 3 outstanding checks. The May bank statement and the May cash payments are entered here. Using step 2 in the reconciliation, list the outstanding checks at May 31st. So we know on April 30th, check 254 was outstanding, but do you see how this shows check 254 was paid from the bank? And then check 255 was outstanding as of April 30th. Here's our bank statement. Did check 255 get paid yet? No. Check 255 still isn't paid. Right? Did check 257 get paid? Right here. Check 257 was paid here. Here's the bank. Okay? So the first thing we're going to do is we need to record that check 255 is still outstanding, isn't it? So we're going to show number 255 in the amount of how much? In the amount of 700 is still outstanding. Then let's go back and see what else is happening here. Here's our book account. Check 258 for $159. Look what happened here. It went through. Check 258, $159. Check 259 for $275. Here it is, $259, $275. Check 260 for $925. Cleared the bank. Check 261 for $500. Did it clear the bank?
No.
It didn't clear the bank, did it? So we need to show check 261 for $500 didn't clear the bank yet, did it? Right? Going back here, check 262. Did that clear the bank? Clear the bank. How about check 263 for $480? Did that clear the bank? How about check 264? Did that clear the bank? No. So we're going to show check 264 here. And how much is that one for? $360? What's our total now of all of our checks? 1,560. So aren't these the outstanding checks as of May 31st? We paid them, or we wrote the checks, but they have not cleared the bank yet. How does that happen, guys? How does that happen that we write a check and the bank hasn't cleared it? The person hasn't cashed it yet, right?
Yeah. Also, it takes like a business day for checks to clear, and if you do it on a Friday, it's not going to clear until like Monday.
Correct. So what do you think happened to our check number 255? Think it got lost maybe? Could. Right? Any questions on this one? Let's move on to exercise 214. Okay? Okay. Enright Company expects to have a cash balance of $46,000 on January 1st, 2014. These are the relevant monthly budget data for the first 2 months of 2014. So we've got all this different information we're going to go through. And then the questions are here, we're supposed to prepare a cash budget for January and February. Well, I don't think, let me just see what else. Let me see what else we need to do here. 214. We'll do that cash budget in a minute after we go back. Let's talk about problem 7.4a, okay? Let's handle 7.4a. Sorry about that. We'll go back and talk about budgets in a minute. But here is the bank portion of the bank reconciliation for LaRoche Company on October 31st, 2014 is shown below. So this is the bank reconciliation, okay? And the adjusted cash balance per bank agreed with the cash balance per books at October 31st. Now the November bank statement shows the following checks and deposits. The cash records per books for November showed here. So our job is using the 4 steps in the reconciliation procedure described on page 355, prepare a bank reconciliation at November 30th, 2014. So that's the first thing we're going to do. Let's go back here a page, 381. So here is the information in October, and then our job is going to be to create a November bank reconciliation, okay? So we've got the paperwork here. We're going to start, let me pull this up. We're going to start by figuring out what our cash balance is for the bank statement. Can anyone tell me what the cash balance is per the bank statement? What's the cash balance per the bank statement? Look on page 382. 17,000. $712.50, right? So $17,712.50. Right? Next, we need to add deposits that are on our books, but that have not yet hit the bank statement. So if we go back here and look at deposits on our books that have not hit the bank statement, what are they? Deposits on our books, but they've not hit the bank statement. So let's look. On November 1st, they're on our books, but they've not hit the bank statement. So look at the bank statement for November and look at our cash receipts journal. Are there any in there that have not hit the bank statement that are on our books? 2478. Where's 2478?
November 4th.
20.
Journal.
The journal. So 2478, guys. Why am I not seeing what you're talking about?
Number.
Okay, if we look at, okay, those are checks, but we're looking at deposits here. So let's look at the cash receipts journal and let's look at the deposits from the bank statement, okay? So let's take each one. On November 3rd, 12.11.60 cents. Do you see how that cleared the bank? Do you see on November 7th, $990.10? Did that clear the bank? Next, we've got $2,575 on the 12th. Did that clear the bank? How about the next one, $1472.70? See how that cleared the bank? The next one, 25. Okay, where am I at? No, 2567.30. The 1650 cleared the bank. The 1186 cleared the bank, but did our November 30th clear the bank yet? For 1304? Did that clear the bank?
No.
It didn't clear the bank yet, did it? So we're going to show here deposits in transit, $1,304.
When it was, wasn't it like
1186? 1186. The 1186 on November 29th here,
Oh, it's wrong up there then.
this cleared the bank here. Are you talking about,
But that's for the 30th. That date down there for the cash receipts journal says it's the 29th, and then if you go back up, it says it's on the 30th.
okay, think of this. This is the bank statement, and these are our books. So we show a deposit on November 29th for 1186, but it didn't hit the bank till November 30th. Okay? But now we have a deposit here on November 30th for 1304. That didn't hit the books yet, or the bank statement, did it? So we're going to add what's called a deposit in transit of 1304. We're going to add that to our, in order to do the bank reconciliation, we're going to add that to have now $19,016.50. What we're trying to do is reconcile the bank statement to our books. Now, what we want to do is checks that are still outstanding on the bank. Okay? So you see, we started with the balance on the bank statement here. okay? We started with this bank statement balance. We adjusted items we have on our books that are not yet recorded in the bank statement. Now we're going to do the same thing with outstanding checks. So let's go back here and look at our checks. Back in October, we had some checks that were still outstanding. We need to look if they've cleared the bank yet. Has check 2451 for $1,260.40 cleared the bank yet? Did it clear the bank? No. So check 2451 has not yet cleared the bank. So we're going to start by number 2451 in the amount of $1,260.40. That's our first outstanding check. Okay? What's our next oh, wait a minute. You guys ready for me? What's our next outstanding check? Did check 2470 clear the bank? Did check 2471 clear the bank? How about 2472? It didn't? 2472 didn't clear the bank yet, guys. So what are we going to do? Number 2472 for how much? 420. Huh? 426.80 didn't clear the bank yet. What's next? Did check 2474 clear the bank? Now we look down here. Let's look here. We've got, here are our cash payments journal. Did 2475 clear the bank? How about 2476? 2477? 2478? No? No, it didn't clear the bank yet. So our next one is now number 2478 for how much? $538.20. Okay, let's look again. Did 2479 clear the bank? 2480? 2481? 2482? 2482 did not clear the bank. So 2482 for $612 we need to show in here, right? Number 2482 for $612. Do you see how we're just comparing book to bank? Make sense? Okay, let's look back. 2483. Did 2483 clear? Did 2484 clear? It didn't. Did 2485 clear? Did 2486 clear? 2487 and 2488. So we need to, from what we've done, we need to make sure we put in 2484, 85, 87, and 88, correct? So we're going to go in here, and the next one is number 2484 for $829.50. Number 2485 for how much? $974.80. Then number 2487 for $398. Then, what's the last one? Number 2488 for $800. What's the total of all of these outstanding checks? The 1260, 40, the 426.80, the 538.20, the 612, 829.50, 974.80, 398, and 800. What is that total? Anybody?
It's too early.
Somebody have a calculator? $5,839.70. Martin, you came through again.
That could be wrong though, because you're reading those numbers when I was typing it.
It's right. So our adjusted cash balance per bank is what? We're going to basically add, we're going to add the $19,016, and then we're going to subtract these checks that are outstanding, right? And it's going to give us 13, I'm sorry.
Oh, 13,176.80.
Perfect. So adjusted cash balance per bank is going to give us that figure. Okay? Now we have to do the same thing related to our books. We're going to take our cash balance per our books, and we're going to add items that are going to balance to our bank. Any questions so far, guys? Does this make sense? So let's move on. Cash balance per the bank. So we know it gave us the cash balance per the bank was $13,176.80. How did we know that? I think it told us on this page. Excuse me. Oh, that's already in there. Cash balance per the books now. Excuse me. Cash balance per the books. Do you see how it gives us our November 30th balance of $11,073.80? See that? So we're going to go $11,073.80. I don't know why that's adjusted cash balance per bank. I have that up there. And cash balance per books is $11,073.80. They gave us that information. Okay, right? And we know our cash balance per books of $11,176.80 because we got that right up here, right? So now we need to add the collection of note receivable, $2,100 plus accrued interest of $157 less our collection fee. How do we know this information? A credit of $22.42 for the collection of a $2,100 note for LaRoche Company plus interest of $157 and less a collection fee of $15. LaRoche Company has not accrued any interest on the note. So we're going to have to show the $2,100 plus the interest less the collection fee, and that amount is $22.42. right? And that gives us a balance of what's that balance? $13,315.80. Now we've got some other things that we didn't know about. Let's go back here and look. A debit for the printing of additional company checks. How much did the bank charge us that we don't have on our books? $85. So we'll put that on here of $85. Error in recording check 2479. What happened here, guys? 381, check 2479. What do we show check 2479 to be? 1705. What does the bank show it to be? Oh my gosh, they took more money, didn't they? Right? That's an error there. So, error in recording check 2479. They recorded it as 1750, but it was only 1705. So, how much money did they take out of our bank unnecessarily? An extra $45, right? And then let's look at the deposit on 11/21. What do we show the deposit on 11/21 to be? Here, what's this deposit? $2,945. What do we show it to be? $2,954. So what's the problem there? The $2,954 versus the $2,945, how much is off? $2,954, thank you. $2,954 versus $2,945, we're off how much? $9? So if we consider this $13,315 and we show these various errors here, how much do all these add up to? $139? So if we take our balance here of $13,315 and then we take into account the monies that were reduced, it comes up with our $13,176.80. Any questions on this? Any questions at all? Let's look now at the next portion. Our next job now is prepare the adjusting entries based on the reconciliation. Note, the correction of any errors pertaining to recording checks should be made to accounts payable. The correction of any errors related to recording cash receipts should be made to accounts receivable. So, we're supposed to do various adjusting entries to adjust our books. So, on November 30th, we have that note that we have to take into account for. How much was the cash we ultimately received from the bank? Go back and look.
So 13,000.
On November 30th, we show that we had a credit of $22.42 for the collection of a $2,100 note for LaRoche Company, plus interest of $157 less a collection fee of $15. Is this showing on our books? It's not, is it? But don't we need to record it on our books now? So what we'll do here is show the cash of $22.42 and then our various expenses. We have a miscellaneous expense of $15, or a bank fee, we could call it. What's our notes receivable? That we no longer, we're going to credit it because we've collected it. $2,100. And what is the revenue of interest? $157. This is information that came through the bank that we don't have on our books. What we're doing now is recording it onto our books by a journal entry. So we're going to show the cash that was increased. We're going to show the bank fee we were charged. We're going to get rid of our notes receivable because we have it now. We've collected the money, and we've also collected some interest. Any questions on this? The next one, on November 30th, a miscellaneous expense. Remember those bank charges for check writing fee, or printing checks of $85? We're going to show that as an expense, and we're going to reduce our cash by $85, aren't we? What else happened? Our accounts payable, we had a check that we showed that was $45 less than what we really, okay, let's go back in here and look. 381. What check was off?
2479.
Check 2479. We showed it to be 1705, but what did the bank show it to be? 1750. So we then need to show here an accounts payable of 45, and our cash was reduced by 45. And then on the same note with our deposit, do you remember that $9 difference? Our accounts receivable was 9 and our cash was 9 because we were off bank versus our company books. So these are the various journal entries we're going to do to reconcile our bank to our books. Okay? Do you want to take a 5-minute break and we'll start up again?